At the start of 2020, iFAST research team published our annual key investment themes and outlook for 2020. In this video, we'll take a quick recap on how our investment calls have done so far this year. We start with our equity calls. Number 1, we strongly favored emerging market equities over developed market equities at the start of the year. It has not disappointed. EM equities is up 15% compared to the 13% of developed market equities. I would call that a hit. Number 2, we rated Asia ex-Japan very attractive due to its economic growth, which will lead to earnings upgrades, undemanding valuations, and double-digit earnings growth, which makes the region one of the strongest upside potential. Asia ex-Japan has not disappointed with more than 21% return so far. I will call that a hit. Number 3, within Asia ex-Japan, we were most bullish in China due to its cheap valuations and strong earnings growth, which results in the most attractive upside potentials that we have seen. And Chinese equities have returned superbly with more than 25%. I will call it a hit. Number 4, we also liked Japan because of its attractive valuations and it offered decent upside potential. The Nikkei has been on a tear with more than 14% return. I will call that a hit. Number 5, we were neutral on Europe at the start of the year because markets have already priced in a recovery there and left little room for upside surprises. As COVID-19 ravaged through Europe, European equities have been laggard with a -4% loss. I will call that a hit as well. Number 6, we rated US equities unattractive due to weakening corporate fundamentals and economic outlook, and also the expensive valuations. However, as the black swan event of COVID-19 happened, the Federal Reserve has undergone unprecedented monetary policy easing, which includes the unlimited QE, and this has helped push US equities to record highs and a 15% year-to-date return. Unfortunately, this was a miss. Next, we move on to fixed income calls. Within fixed income, we liked EM debt due to its improving economic fundamentals and also Asian high yields because of attractive credit spreads. Then we saw that EM debt and Asian high yield outperformed. I would call it a hit. Next, for Malaysian fixed income, we favored long duration bonds compared to short duration bonds because we think that the interest rate backdrop is supportive, and it turned out to be spot on because Bank Negara cut interest rates and Malaysian bonds rallied more than 6%. Therefore, it is a hit for us as well. To wrap things up, investors who have a diversified portfolio across different asset classes and geographies would have done tremendously well in 2020, especially if they had taken into account our calls into their portfolio allocation. Look out for our next video, which will talk about our key investment themes and outlook for 2021.